Here is a straightforward way to trade breakouts. If this helps, consider subscribing. Before we know how to trade a breakout, we need to understand the concept of candle signs. The basics of candle signs teaches us that there are two important sides of a candle. It is not going to be the open and close, high and low. That is too confusing. We need to make it more simpler and put that into a perspective where we can use that over time and have a consistent result from candle trading. What I mean by that is, what is going to be the two most important sides of this candle? It's definitely not going to be the bottom and the low of this body. Everything that this body represents, we can keep that out as liquidity. We are not trading inside of this body. We're not trying to trade whatever is happening from a reaction inside of this body, because this is all just liquidity. The most important sides of this candle is most definitely going to be the premium and discount of the wicks. This is where we're going to get price to react from, to continue lower to the bottom edge, or have a breakout from an edge to continue to another wick gap, which is just a wick from a candle on a higher time frame. The issue is, everyone's basic understanding is that we have a 3-candle pattern, and this 3-candle pattern will give us a fair value gap. We expect this fair value gap to give us the reaction that we need, and then if we don't, we go inverse on it. What if I told you that the main issue with that is, this fair value gap is not premium or discount, guys. It's just the middle of a body. What we're trying to do is get the most extreme point, and this is where we're most possibly going to find. Let's get into the understanding of what a range-based breakout model is. The range that we are using is a 22-minute candle. Same as in the example that I just showed. All what we're doing is breaking down that 22-minute candle into a 1-minute range. This 1-minute range is going to give us wicks, same as a 22-minute candle. And then we are just going to be waiting for reactions from the edges of this 22-minute candle that got turned into a 1-minute range. Looking at this first 22-minute range, it was created from 9 o'clock till 9:22. It is called the NY AM MCR. So starting this off, we can look at this in the perspective that we have an edge at the top. So we're going to call this the MCR edge. But we do not have a MCR edge at this bottom. So now everyone's like confused. But the thing is, there is. Where did this edge react from? This wick at the bottom. Okay. Let's look at what price is reacting from to the left. Possibly this doji, but we never touched it. If we look left, we have this giant wick and then this bigger doji right here. So I'm just going to mark out this doji. So we have our two edges that are marked for price to react from. Okay. And then if we have our breakouts, this is where we're probably going to get them. So this is going to be our main key points of interest. Another thing that we need to look at is standard deviation. Standard deviation from our ranges. Retracements are expected up to 1.5. So I'm going to mark that as retracement as well. And then 1.5. So what we're looking at right now is price can do a breakout, come into the retracement, but then have your fake out and then go to the other edge. But if price wants to hold, it could do a breakout, create price internally into this retracement zone, react off the top of this MCR, and then just use the wick created at standard deviation as a means to go higher. So we have all of these possibilities right now. So let's see what price is doing as we're creating a range and where are we breaking out and how can we react from this. We have our first breakout. This does not mean that we enter in directly. We need to understand one main thing about this model, which is 70% of days turn into false days. So what does that concept mean? A true day is when we only have one breakout on an edge of the MCR. So if this is a true day, price will break out and then react from this edge or react internally and then continue lower. That is a true day. But if this is a false day, price will react from our retracement, probably find some support at the bottom of this MCR, continue higher, and then break out with a candle body to the other side, confirming a false day. Remember, it's only a false day once we have a candle body closure on the other side of this edge. So if we still have a wick, it's still considered a true day. Let's see what we can look at once price starts trying to find some support at this retracement. So we see the indicator is drawing out our bottom wick and our top wick. This is where we're going to get price. Remember, everything has to do with wicks. So if we do not close below this wick, there's no continuation of this current price. But right now we're creating this larger wick on this 1 minute as well. So we have a wick rejecting off of this wick. Price still failing to go higher. And this is where we have our first indication that price wants to continue in the opposite direction. So we're not looking for sells. We need to see price creating a candle count lower, which means within 3 candles, there needs to be a closure below a candle body for price to continue. But that same concept just went reverse. Within 3 candles, we had a candle count going higher. Do we see price going to the up edge and then maybe going to this retracement? We saw price completely reject off of this retracement zone, going all the way up to this top retracement and hitting the 0.5 standard deviation. We haven't even closed into this retracement yet. So this is a strong indication that we probably don't want to continue. Do we see price continue going higher? And then if we do we see price rejecting off of any of these wick gaps that we're creating at standard deviation, meaning that once we close above it, all these wick gaps that are acting as this resistance from the standard deviation, they are becoming the key points of interest at each standard deviation inside of this range. We just created a doji as we got into this retracement zone. Right now, I want to start seeing price creating a candle count to go lower because I want to buy. But the issue is if we start failing at either one of these edges, the edge at the top of this MCR range or the edge at the bottom of this MCR range, price is most probably just going to continue lower. So let's see how we react from this. Do we get a candle count reacting from this retracement zone? We have a candle rejecting off of this top wick, going back into this doji. It looks like price wants to go below this retracement. So let's see if price does. And I'm only going to be looking for sells pretty much once we go below this candle. And if we do go above this candle, I'm going to wait for a reaction or a candle count from this 1 standard deviation, which is just above price, and then also this 1.5, which is just above price. So we have price pushing below this retracement, going back in. Let's see if we start getting candle counts to go lower. Price still trying to go below this range, going back into it. We are finally creating some sort of closure below a candle, but this candle still took that high. So we are not looking for any type of sell until price closes below this initial candle. You see our price shot up all the way to this top edge. This candle that went back into the range, I'm going to use that as a candle count. So let's see if we get a candle count below this initial candle. So the same logic at this bottom, where we had this retracement, price came in, it had a candle count from this lowest candle within 3 candles, went bullish. Here we have price creating a consolidation. Remember, price has to go somewhere. It's going to stay inside of a range, yes, but it has to close on an edge. It's going to do that sometime. And then once we do, it's going to break out of that consolidation and probably continue in that intended direction. So right now, price is bearish. You can go in for sells. Put your stops above this range. Or you can play it safe and go 18 ticks, which is going to be the standard that we're going to be using on this model. And then I'm going to target this bottom edge. So price is closing back into this MCR edge. Do we get candle counts confirming that we want to continue higher? Price is rejecting, getting a doji. Price is creating another candle count to go lower. I want us to look at something very, very special. And this has to do with dojis. This is the original doji that we got as we got to this range, right? Only once price closed below this doji with a candle count, this is the candle count candle, within 3 candles, we had the confirmation for a sell. And that was also the moment that we broke below every one of these dojis. We're going to this bottom edge of MCR. We're getting our first candle count to go higher. The thing is, none of these candles took the low of this original candle. As you can see on this indicator, we still have this wick up at the bottom and this wick up at the top. So until we go above this candle, I am not going to go bullish. Now we're going below. We have another candle count, closing below this original candle that rejected. Now we're below the fortification of this MCR range. As I said, this is the original candle where price rejected. Look how beautiful price reacts back from that original candle. Coming down to that bottom resistant retracement area that we want price to go away from. Do we or do we not have a candle count from this bottom edge? So we're creating a doji. Do we start closing above price? As we can see, this indicator marked out this bottom edge and this top edge where we're not closing yet. Here we start having candle counts higher. If this happens, I want us to start looking at the fortification. The same way that we had a breakout from this range, we just had a breakout. If we have a 70% chance of price closing on the other side once we have a breakout, we need to look at these edges, right? Did we have price reacting from an edge once we closed above it and went back into it, and then have our candle count away from it? No. Once we broke away from this low, did we have a candle count once price touched this bottom edge? No. So we just had our breakout confirming for the sells. What is the first edge that we're going to touch? This bottom fortification of this MCR range. So let's use this as our 0 candle. And do we get candle counts? Meaning, do we get a candle closure within 3 candles below this candle that is reacting from the edge? So within 3 candles, we have nothing, but yet again, price cannot stay inside forever. So this is the candle that then wicked the top, which is the Doji. Mark this out. Within 2 candles, do we get a closure below? No, we do not. Price cannot stay inside forever. So I'm going to use this candle. Yet again, until price closes above this Doji, I'm not confirming for buys. And until price closes below this Doji pretty much, which is going to be this base candle as well, I'm then not going to be expecting sells. Within 1 candle, rejecting away from this Doji. So if we mark out that Doji, the same concept as above. The candle count happened below the Doji, confirming the direction. The candle count is happening below the Doji, confirming the direction. So once we close below this one, what do we think is price going to do? We're still waiting for price to close below that original Doji at the bottom. And there we go. There's the closure. So if price had its closure below the lowest Doji that we created this entire range, what do we think is going to happen? Price is coming back in to the top of that Doji. And then we start selling away past the retracement zone. So now it's just sells from here, going all the way to standard deviation too. I will be going into more in-depth models in the future, so please stay tuned, subscribe, leave a like, and comment down below anything that you guys want to learn more about this model. If you guys want to contact me, my team, or any of my mentors, please go to the Discord link down below, and I'll see you guys there.